Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, there is little to report at the moment for the Australian dollar as it continues to trade within the broad bands of 76.60 to 78 cents. Nevertheless, the technical implications, the MACD is negative, but the RSI is still attempting to restore its bullish bias. And therefore, if so, we may see, at the moment, we're in the middle of the range, but we could see a small impulse to the top side, but likely to remain limited as 78 figure 15 should continue to contain any rally. Upside attempts should fail, and I am expecting from the broader sense of a pullback to that level of 76.60 and reassess from there. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, hovering around 90, we can see that the euro at the moment is lackluster price action into another day. And therefore, we could see from a technical point that the MACD again is negative and the RSI is attempting to restore. So there is a little bit of two-way price action that likely to fail to any renewed rally. The market is waiting for the inflationary numbers out of the US on Thursday. Along with that, we get an update from the ECB rate decision, which is widely expected to keep rates on hold. The dollar yen, well, the market was a little bit whippy overnight, but nevertheless still maintains to a negative bias since that rejection above 110. I do anticipate that the market will fall further and look towards 108.45 and reassess from there, as there could be a little bit of profit taking coming back into play. Looking at the sterling, the market is a little bit cautious after recent news that the recent opening from the lockdown in the UK may come under a little bit of a uncertainty due to the COVID-19 from India, that is the resurgent, that could actually put a bit of a mixed bias on the pound, therefore could see negative MACD, and therefore the market is attempting to restore. But nevertheless, the market should continue to look to 140 and a cap of 142.50 should continue to play out. Therefore, I do anticipate that from the break in sterling yen's trend line, that we should eventually see a decline to 153.5 and reassess from there, as the technicals are still negative. The gold outlook, that is, the market is still holding to this trend line and little in terms of direction, as most market participants are probably sitting on the sidelines and now waiting to see for the inflationary numbers out of the US. Nevertheless, from the outside range day, the confirmation of the break, and as long as we don't close above 1,912, that New York time that is, still keeps a focus towards 1,866 to 1,855. And wrapping up, well, as you can see from the monthly chart on oil, it's still looking towards that target as $71, as called earlier in the week. Do reassess from there, as a break above 71.60 would see a stretch towards $73 a barrel. The trend is still very strong from the monthly. And looking at the weekly, there is still a trend there. And looking from the daily, from the ADX, there's still a trend here, which still keeps the bullish bias in play. However, do be a little bit cautious above $71 a barrel, as a bull trap could be waiting. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.